Another massive jobs print yesterday with huge, double non-farm payrolls, so twice as many positions open as people were expecting, or twice as many employed. The unemployment rate dropped from 3.8% to 3.7%, indicating again a strong labour market. So why would they cut rates? Well, what we saw in the markets yesterday is they think they're not going to cut rates now in March because of this. But when you account for inflation, the Fed is actually too restrictive at the moment. You have to remember, inflation, if I can find an inflation measure here, let's get CPI, should be one. I guess I can look at this. No, fuck that. I want it on the bottom. CPI. Why is there not? CPI and PPI? I guess that'll do. So when the Fed raised rates all the way through 2023, if we go on, or 2022, sorry, the Fed went aggressively raising rates from March. Why? Because inflation was rising. This is fucking wrong. That's bullshit. The axis is totally wrong here. I think there would just be good indicators. PCE maybe? Core PCE? Nope. Inflation. Can't believe nobody has a good indicator for fucking inflation. Inflation rate, US inflation rate. There it is. There's a good one. Perfect. Thank the Lord. So, the Fed, in response to the rising inflation, which went from practically zero, right, but below the 2% target rate in 2021, all the way up, as you remember, 21, we reached a peak of 9%, right? And then they started aggressively hiking interest rates with the intention of bringing down inflation. So they went from 0 all the way to 5.5 where they are now, right? That worked. Inflation went from 9% to 7 to 5 to 3. And here we are at 2.83, or sorry, 2 point, what is it on? Core PCE I think is 2.9. CPI is around 3.3. So they've got it back down. That actually means now that the Fed is restrictive. They need to cut rates to bring it back into line. What they're waiting on though is to see, is inflation going to remain at this level? Right? Because if inflation starts to tick back up, they won't cut rates. But if inflation continues on its path like this, where it's slowly drifting down, they will. Now, the mistake people are making here, in my opinion, is they think that the Fed has to do this again and go back to zero interest rates. They don't. The neutral level right now will be about 4%. Because when you account for the economy, so how fast the economy is growing, plus inflation, plus the interest rate, 5.5% is actually very restrictive if inflation remains below 3%, or around 3%, especially if it goes to 2%. It doesn't mean they have to cut back to zero. That's not what people are saying. Anyone who thinks that the Fed's going to go from 5.5 all the way back down to 2 or 1 or 0, that is going to come in response to a crisis. But what they're going to do initially is to cut it to 5 or 5.25, then to 5, then to 4.5, then to 4 eventually. This will take maybe 3, 4, 5, 6 cuts over the next year to get it back to a more manageable level. We're not supposed to have zero interest rates. That's a phenomenon that came out of 2008, right? And the last time they tried to rise them, Trump stepped in and said, "What the fuck are you doing?" And Powell's like, "Okay, sorry." And then obviously COVID happened. But here's the big difference. All past projections need to be thrown out the window, in my opinion. They doubled the money supply in 2020. Doubled it between 2020 and 2024, where we are now. It's doubled globally. So this is like a financial experiment, the likes of which we've never seen. The US national debt is 34 trillion. It's ballooning out of control. So looking back to all these, even the 2% inflation, even the what should the funds rate be, what happens when they cut rates, I think all of this is just using past data to try and predict the future. And we saw with the yield curve that that's just totally wrong. And the difference is, and this is not, you have to understand, the stock market used to be a measure of the economy. Right? The stock market used to be, if the economy is good, if people are in work, if the companies are making money, stocks will go up. That all ended in 2008. The stock market is now a reflection of how much money has been printed. And so yeah, of course, the companies grow, but they grow because there's more money. And some of them outperform because the best companies will always do well. Your Apples and Amazons, they are great companies, right? They make loads of money. But even if, let me put it this way, even if every single company in America made $0 and they just existed, the stock market would still be going up. Because the money supply is going up. Because people, smart money, elites, rich people, wealthy people, millionaires, billionaires, they understand the money supply is increasing. I don't want to hold money, cash. I need to do something with my cash. So they put it in stocks. They put it in gold. They put it now in crypto. They put it into whatever else. Property, the big one. Real estate. That's also why the real estate bubble is not going to crash. Commercial real estate, sure. Maybe that'll have a bad time because of COVID. But real estate itself, the most scarce resource on the planet, the most scarce asset, I should say, on the planet, land. There's only a finite amount. We can have a crash, but it's going to get bought up very quickly. Because there are not enough pieces of land on the planet for every person and all the rich people who want to buy them, because they don't want to own cash, because cash is worthless. If you bought a house 50 years ago for 50 grand and it's now worth $1 million, that's 20x. I can guarantee you the cash you fucking put under your mattress for a rainy day has not 20x. It hasn't multiplied in the last 50 years. So everybody knows this. But assets are finite. There's only so much land in the world. There's only so much gold. There's only so much Bitcoin. There's only so many good companies, stocks, right? You're not going to invest into the British stock market or the German's okay. German's doing all right. You're not going to invest into the Japanese stock market, right? The Nikkei is coming back up and trying to rise again, but it's been absolutely crushed since the 80s, right? Yeah, it's ripping up one way only. Why is that? Because the Japanese are doing their own fucking massive QE. The Japanese have been doing QE infinity for decades. Just that they've been trying to get inflation because they can't get inflation because their economy was in such bad deflation after the big bubble and crash. So owning Japanese stocks, even though it's great if you own them exactly from '09, why do you think that is? What happened in '09? They all started printing. German. What happened in '09? Printing. More euros. Looks great. German stocks are up. The DAX is up. But it's printing. How many euros have been printed? So the DAX is up 367%. Can we get the Eurozone M2? Probably not. Maybe I can get it on this. How much is it up since '09? Only goes from 2019. Sneaky fuckers. If anyone can find that chart, let me know. Because I don't need to tell you that obviously there's more euros being printed. You all live in the real world. Not this real world that we're in. The actual real world, right? You all live on planet Earth. You all know that your euro is worth less than it was in '09. Your pound is worth less. Your yen, your dollar. They're all worth less because they've all been printed to some degree. And that's the big thing. So whenever the path of monetary policy is set and fiscal policy, which means that the central banks will print more, the governments will print more to fund government programs, what are we supposed to do? We have to own assets. And as I said, there's only so much land on planet Earth. Not everybody can buy land. So what is the next best thing? Capital markets. Buying stocks, buying stock indexes, buying gold, buying Bitcoin, buying anything. Art. Anything that is somewhat finite, scarce, is going to go up. Not because those things are that great, but because the money supply is increasing. So I fully respect the fact that the markets can go down. They will go down. Right? I'm not saying nothing ever goes up forever. There's just general mean reversion that has to happen. But we know the path now. As soon as there is shock in the markets, the Fed steps in. We see this. The UK did this. This was November 2022 whenever all the markets bottomed out. October, November was when the UK gilt crisis happened. And the Bank of England stepped in and basically averted a financial disaster. And that was exactly when the Fed switched their own policy and became less restrictive on the monetary side. Because they have to. They understand that if they don't, it's all going to break. So I'm not saying it's a good system. It's a fucking terrible system. It's absolutely broken. But if we know the only response currently to that system is to own assets, then we need to own assets. That's just it. It's simple as. And that's why Bitcoin exists. It's outside of that system. And there's another, I don't know if I can find it. The Venezuelan stock market. I wonder what the ticker would be for the Venezuelan stock market. Because this will really show, like, let me see Venezuelan money supply. Right, so there's the Venezuelan money supply, right? So I think you all understand. Everyone knows there's hyperinflation in Venezuela, yeah? Where it's gone from fucking $1 billion or whatever to 65 billion in like a year. Yeah? If I can find the Venezuelan stock market, Venezuelan stock market ticker IBVC. Let's see if that works. No. These are bonds. I want to find stock indices. Bum, 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 bum. We'll get it. We'll find it. Biggest Venezuelan stocks. Most active. I want to see the largest. Okay. Banco Provincial, BPV. Would that be one? Let's see if that works. There you go. So, what the fuck? Fuck that. So, here's, no, that's app. What the fuck? It's not letting me go to the Venezuelan ones. Maybe there's a chart here somewhere. There we go. So, we finally got there. This is the Caracas Stock Exchange Stock Market Index, right? So this is like the S&P 500 for Venezuela. Do you think Venezuela is a good place to invest at the moment? Venezuela is in literal hyperinflation. Venezuela Central Bank interest rate. 56%. Remember, it's 5.5 in the US and people are freaking out. 56%. Every year, the money is just getting crushed. The value of Venezuelan bolivars is plummeting through the floor. If you look at the bolivar, how we look at the US dollar to the bolivar, do we have it? Look at that, like just like a shit coin, down only. Absolutely, sorry. US dollar to Venezuelan bolivar, up only. If we invert that, it'd be down only. Why? So why is the bolivar going to zero against the dollar? Because Venezuela is in hyperinflation. Why is the Venezuelan stock market going up then? People in Venezuela are buying stocks because it's better than owning the bolivar. They have a choice. They can't invest in the US stock market. They can't invest outside of Venezuela. So their choice is, do I want to own bolivars, which are just going down only against the dollar, right? If that's going up, it means the dollar's stronger. I'm losing purchasing power. So I need to own stocks. The stocks are going up. Argentina is the exact same. Argentinian stock indices are the exact same. Up only. Up only. Do you think Argentinian stocks are good? Or is it because the Argentine peso, if I can find whatever the fuck that is, against the dollar, am I blind here? There we go. Is literally down only. So if the Argentine peso is losing its value at this rate, and the Argentinian stock market is increasing at this rate, what does that tell you? Argentinians would rather own the stocks than the peso. The same thing is happening in the US, in the UK, in Europe, in Japan, in China. It's happening everywhere else, just at a far less aggressive rate. It's not as crazy because if you go to a restaurant in Argentina, there's probably some Argentinians in the real world, you guys know this. Restaurants in Argentina don't have prices on the menus. There might be a guide price, but it says subject to change. Because by the time you go in to eat your meal, to the time you actually pay for the meal, the price could change. That's how volatile their currency is. That doesn't happen in the US. Doesn't happen in the UK yet. Doesn't happen in Europe yet. But over the course of a few weeks, prices change. Right? Price of fuel, price of milk, price of bread, like consumables, everyday food and energy, they're very volatile. There could be a 20 or 30% swing in the price of your fuel at the pumps in a few weeks. You could buy milk, you could buy a litre of milk for $1 or $2 and go back a few weeks later and it could be $2.20. That's 10%. Did your pay go up 10%? No. The volatility is there. It's just not as smacking you in the face like it is in Venezuela or Argentina or Lebanon or Turkey. Right? This is one of the charts I always show. Bitcoin to Turkish lira. Bitcoin to the Turkish lira has been in an up-only bull market fucking forever. I think there's one on Binance, isn't there? Yeah. Up only. One-way bull market against the Turkish lira. This is the thing you need to look at and remember. We always anchor stuff in terms of US dollars, which is the way we should. That's how crypto generally trades, even if you're not in America. The dominant form of denominating the Bitcoin is US dollars. But if anyone in Turkey can buy Bitcoin, they're buying Bitcoin because they don't want to hold the lira. And that's what's happening across all of these countries. and there's no sign of it changing. And that's why the stock market in the US goes up. So I hope that explains it. Yes, the companies in the US are great. Apple's great. Amazon's great. They make loads of money. Nvidia, profitable companies. Great, they make money. Cool. But they're also just going up because the money supply is increasing. Just like you wouldn't say that whatever Venezuelan company is not making record profits. The Argentinian companies aren't the top companies in the world. Yet their stock market's insane up only. Because it's denominated in bolivars. Because if they sell those stocks, they don't get US dollars, they get bolivars. And then if they sell into bolivars, next week, the bolivar's down another 10%. So they don't do it, they don't sell. So what does that mean? They're buying and not selling. If you buy something, if everyone buys and doesn't sell, it's going to go to the fucking moon. You've only got buy pressure, no sell pressure. That's how you get these fucking crazy charts. So there's a very, like a much more condensed form of that happening in the US and in Europe, in Germany at least, in Japan as they're trying to run it up. People will still sell, right? So people will still sell the DAX, they'll sell the Nikkei, they'll sell the S&P 500. Because if they sell it today, they're not going to suddenly be down 15% on their cash tomorrow or next week. But the balance over time, as soon as it drops back and the Fed are starting, we need to support the banks, we need to do this, do that. The government prints another $1 trillion to add on to the national debt. People are like, why did I sell my stocks? I need to get back in. So that's the basic like frame of logic you want to have on it. This doesn't mean the markets can't go down. The markets will go down. Markets are cyclical. They will go up. They will go down. There will be dips. But until something drastically changes with the path of monetary and fiscal policy, this is just the way the markets are going to go. And this started in 2008, and then it accelerated in 2020 with COVID. And there seem to just be, they're on a one-way path, and it's like the Titanic, right? It's heading for the iceberg, but you can't, it's too late to correct course. So that's why people want assets. That's why the markets keep going up. That's why Bitcoin exists, and that's why I think Bitcoin's just going to keep going up. So, GM, see you later on the live stream.